September marked a striking turn in housing market sentiment. Consumer confidence increased, new listings rose, and 6 of the 8 capital cities recorded a rise in home values over the month. The 2 capitals that failed to record a rise in home values are Sydney and, not surprisingly, Melbourne. Combined, they make up approximately 55% of Australians' housing stock, and together they managed to drag Australians' home values down to a 0.1% fall, which by the way is the smallest decline since values started to reduce in May this year. This is made out of a 0.2% drop in the combined capitals and a 0.4% increase in the combined regional areas. The main culprit in this story is Melbourne, which recorded a 0.9% decline in housing values, totaling a 5.5% decline since peaking in March. What I must stress though is that Melbourne is still up 3.1% over a 12-month period. That's right, compare the current housing values with those of 12 months ago and Melbourne is still up by 3.1%. Add to that the fact that the stage 4 lockdown is nearing its end, I can't help but being optimistic about the housing values over October and in particular November, when I expect to see quite a few auctions happening again. Let's address the regional markets now, which have continued to outperform the capital cities with a 0.4% increase in value over September. Tim Lawless, head of research at CoreLogic, believes the resilience in regional values can be partially attributed to the fact that regional areas haven't been recording the same growth rates pre-COVID as the capital cities, so home values in these markets are often more affordable and don't have a high base to fall from. But I would add to that the transition of demand away from cities towards the major regional centers that we've been seeing, and in particular those that are close to the larger capital cities, so that residents can commute back to the cities if required. Remote working arrangements are no doubt a factor in supporting demand in these markets as well as lifestyle opportunities and a desire for lower density housing options. Looking ahead, the housing market outlook is subject to headwinds, as fiscal support is reduced, labour markets remain a little weak, and mortgage payments deferrals become less common. However, low mortgage rates with the prospect of them reducing even further, low inventory levels, government incentives and improving consumer sentiment will in my opinion outweigh the negative economic shock brought about by the pandemic. As said earlier, I look forward to seeing the numbers of October and in particular the ones from November.